Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings conference call of AGI Greenpac Limited, formerly known as HSIL Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Ravi Gotwal from Churchgate Partners. Thank you, and over to you, sir.
Thank you, Jacob. Good evening, everyone, and we welcome all the participants to AGI Greenpac Limited, also formerly known as HSIL Limited, Q1 FY23 earnings call. Joining us today from the management side, we have Mr. Om Prakash Pandey, AGI Greenpac Limited Chief Financial Officer, Mr. Rajesh Khosla, President and CEO, AGI Glasspack and Garden Polymer, Mr. Sandeep Sikka, Group Chief Financial Officer. Before we begin, I would like to remind all the participants that some of the statements or comments made on today's call may be forward-looking in nature. These may include but are not necessarily limited to financial projections or other statements of the company's business plan. The company disclaims any obligation to update these forward-looking statements to reflect future events or developments. Kindly refer to slide number 15 of the presentation for a detailed disclaimer. Now, I'll hand over the call to Mr. Om Prakash Pandey, Chief Financial Officer, for his opening remarks. Thank you, and over to you, sir.
Good evening, everyone, and welcome to AGI Greenpac Q1 FY23 earnings call. We have already circulated our earnings presentation, which is available on our website as well as the stock exchange website. I am sure you would have gone through the presentation, and we would be happy to take any question afterwards. As you all may be aware of, we completely divested building product division in our last quarter. AGI Greenpac now has only one business division, which is packaging products. Therefore, all the numbers and comparative figures that we are going to highlight pertains to packaging product business. Now, talking about the first quarter, I am happy to announce that we have begun the year on a optimistic note with a strong quarterly performance. In Q1 FY23, company has delivered a strong performance and reported revenue from operations of 522 crore compared to rupees 293 crores in the same quarter last year, registering a stellar growth of 77.7% on year-on-year basis. Sales growth was primarily due to better realization and increase in glass container packaging volume supported by robust demand from beer and liquor industries. The company delivered an EBITDA of rupees 92 crore, registering a growth of 57.1% on year-on-year basis, and continues to maintain a strong EBITDA margin of 17.6% despite the substantial increase in fuel and other input material prices during the period. The margins were driven by higher sales, better product mix, and inherent operational efficiencies present in the manufacturing plants. Net profit stood at rupees 66 crore compared to rupees 18 crores in Q1 FY22, a growth of 257.5% on year-on-year basis with a margin of 12.6%. Company has a net debt position of rupees 782 crores at the end of June 22. Now I would hand over the call to Mr. Khosla to talk about packaging products and performance.
Thank you, Mr. Pandey. In Q1 financial year 2023, we delivered the great performance on the back of strong rebound in demand from the key user industry. The revenue growth was supported by increased demand from the beer, liquor industry, exports, and other allied industries. Sustainably to our revenues in this quarter. The rise in out-of-home consumption and a reduction in taxes by some state governments also contributed to the growth along with the passing of increased commodity prices to the consumer. The company delivered growth on both year-on-year and sequential basis, driven by sustainable demand, revival, and favorable macroeconomic factors. Glass container capacity utilization during the quarter was 94% as compared to 89% in the same quarter last year and 93% in the previous quarter. We have already begun trial production of our greenfield specialty glass facility of 154 ton per day manufacturing unit at Bongir, Telangana, and we will commence the commercial production in Q2 financial year 23 onwards. I am further pleased to announce that AGI has forayed into the export markets of European Union, Canada, South Africa for its niche products. With the clear strategic roadmap ahead of us, we are confident in delivering sustainable growth and creating a long-term value for our shareholders. Thank you very much, and we are now ready to take any question. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of A.M. Lodha from Sanmati Consultants. Please go ahead, sir.
Good afternoon, gentlemen. Am I audible?
Yes, Mr. Lodha, you continue.
Hello?
Yes, sir, you're audible.
Yeah. Sir, congratulations for good set of numbers this quarter also. And I have got 3 questions, sir. There was a other income element in the March 22, there's 21 crore 33 lakhs, which is not in this quarter. Can you tell us what is the nature of that other income was in March 22 of 21.33 crore?
So that was, we get number of subsidies from the state government. And one of the subsidy which when we set up the plant is the SGST refund. So if you see the notes to the March accounts, it explains. So there was an odd income which was credited because we do it, this is a reasonable certainty. So we got some, refunds from the government on account of the local sales made. And that was in March 22, the other income. Main component was that.
Sir, we are about to commence the production in the new plant in this quarter. We will get the subsidy on this plant also?
We will get subsidy, but it takes a lot of time, because these subsidies...
That's all right. Because this subsidy belongs to our old plant.
Yeah, this is for the old investment which we had 5 years back.
Okay, sir. Now, my second question is, sir, the fuel and power and fuel expenses has gone up steeply from 98 crore to 126 crore in this quarter. What may be the reason for such a steep jump in this power and fuel? And what steps the company is taking, like green energy, solar, to contain the power cost?
So, if you see this process is a fairly, fuel-intensive process, because what we do is we use raw material or the broken glasses, which we call as pellet, and then melt it using the fuel. As you would recall that almost all the fuel prices have almost doubled, in the last 6 to 7 months. And but we have a flexibility to use various kinds of fuels. I'll request Mr. Khosla to just elaborate on, what are the enablements which we have and how we are making this process more efficient internally.
Yes, sir.
The price of fuel and power in quarter 1 of financial year, the price of power has already gone up. it has gone up by 1 rupee per unit. And these are being regulated by the state government, and we have to follow with that. And regarding the fuel part, I think it is a well-known phenomena all over the world that the fuel prices are just jumping, skyrocketing everywhere. And these fuel prices are directly linked with the crude prices, and crude prices are directly linked with the geopolitical situation which is arising all over the world. So because of that, these things have gone. So what we are doing in that case, number one is a green energy, what you are talking about. Yes, we are already doing a lot of the green energy. Almost 18.5 megawatt of solar electricity is being produced by us, and we are doing much more. But there are some regulations of the state government where we cannot surpass that. And we are constantly in touch with the state government to permit us for the further use of the green energy. And once we get the permission, we will be able to do it. Regarding the overall fuel prices to be controlled, a lot of things are happening where the energy audit and other things are being done, where we are trying to reduce the consumption of energy by moving in more efficient, more productive manner. That is an ongoing exercise, and that is a part of the operation excellence thing, which we are doing it regularly, and that is the reason we are able to sustain with our numbers and the numbers in the future also.
Okay, sir. My last question is, sir, then I will join the queue. I have got 2-3 more questions, but I will join the queue. My last question, sir, have we received the full consideration from Somani Home Product for 700 rupees?
Some part is still pending, around 90 crores. What had happened is most of the LCs for procurement of raw material and other things were opened as on the effective date. So there is a settlement procedure under the agreement, which is being done, and some land parcels are yet to be transferred in our name. So pending that, we expect that within next 30 to 60 days, another 90 crores should flow from Hindware to AGI Greenpac, so that the full settlement happens for the transaction. So we had till 31st
In this
March.
connection, sir.
Sorry.
Sir, go on, sir.
So we have already said.
In this. Yes, sir.
Yeah, please go ahead. You can ask.
In this connection, sir, this time in presentation, we have not given the debt figure. In last presentation, the gross debt and net debt figure had been given in the presentation. So, as per the indication in the last Concall, the total loan book of the company would have been 560 or 570 odd crore, something, after repaying this 70 crore, after getting the money from this Somani Home Product. But what I could guess from the opening of this Concall, the loan book is more than 700 crores, sir. Can you put some light on it, sir?
It is 782 crores. As I said, we will get 90 crores more, so it will go around 700 crores. So also to consider that we are currently undergoing an expansion plan, and the money is being spent on the expansion plan therein, both in terms of rebuilding and expanding the capacity. So what we do is we use for the long-term money, we use long-term loans. Accordingly, that the debt component has slightly increased because the term loans disbursements have also happened during the quarter.
Thank you. I will rejoin that, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Nikhil Gada from Abacus AMC. Please go ahead.
Yeah, hi sir. Thanks for the opportunity and congrats on a very great set of numbers. So first question is, could you break up this growth into how much would be volume and how much would be the value growth, please?
So basically, if you see, we got various price hikes during the quarter. Price hikes which we have got based on the input price increases range from customer to customer, but this is in a range of 3,000 to 5,000 rupees per ton. But it is not that all the benefit has accrued during the entire quarter. So when you see the overall price benefit which is coming to us is around 5 to 6%, and overall volume is around 12 to 13%. So which the overall revenue number grew by 18%, which means that in this current quarter based on the price increases, some impact, the positive impact of increased realization you will have to see during the quarter 2 of the current financial year.
Understood. So when you say 18%, you're saying the sequential growth from 4Q to 1Q?
Quarter on quarter.
Quarter on quarter. So 5-6% would have been the value as in the price hike, and the 12 to 13% would be the volume growth.
Yes.
Understood. So then just on...
This is, I'm saying for the glass.
Got it, sir. And I think that is like close to 90% of the total revenues. Understood. So just continuing on that now, since we have sort of close to now full utilization in this capacity, and this debottlenecking that we are planning, I'm assuming it would be in the glass itself. So how much more capacity can we sort of gain from this?
So we are rebuilding the furnace.
No. You mean to say in the quarter what we are mentioning, how much capacity has been added up, or how much debottlenecking has been added up, or what will be there in the future? So what is the question?
Are you talking about the future opportunity available on the expansion? Is that the question? We lost your voice, Nikhil.
Hello?
We have lost the line for the participant. We move to the next question. The next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Yes, sir. I just wanted to know why is the ROC of our company so low and for so many large number of years, sir? And what can be done to improve it, number one? And is it our sort of a sunset industry, because of that valuation given to our sector is also quite low? And there was a related party transaction. Is it that also impacting our price earning and valuation, sir? Real estate, some thing is still lying with us, sir. And how is the opportunity side for us, sir? Thank you.
So basically, I think the first question which you're asking is why is ROC low? So if you see, glass is a very capital-intensive procedure. Although today we are the most profitable company in terms of the container glass because of our internal efficiencies which we have been able to build over the last 5-6 years, but still the glass furnaces require proper maintenance, and you need to continuously repair them, rebuild them. One reason why you are seeing ROC slightly down is because we have recently invested around 250 crores into 154-ton high-end glass furnace, for which the benefits are yet to come to the P&L. So this furnace is under trial run production, and and the benefits will accrue over a period of time. Apart from this, there are some additional expansion which is being done, as we talked about. The tons per day capacity debottlenecking is being done. So there is a capital work in progress. So these are the reasons, wherein the ROC is right now under pressure slightly. But as we move forward, because you see the EBITDA margins are in a very good trajectory, so we feel that ROCs should improve over a period of time. Second question, as far as the related party transactions. So almost majority of the related party transactions, wherein we initially had the manufacturing plants of building products which we sold out under the slump sale, has been given away. And today, the only related party not the only, the major related party transaction is that certain land and buildings which were not transferred because of their intrinsic values. We are taking rentals, but these rentals have been approved, and they are based on the third party valuation. They are on arm's length basis. They have been duly approved by the shareholders of both the companies. So I think this is the broad thing, and not much of the related party transaction as was there as of March 22. So they will now going forward be very less.
I believe our plant is running at a very high capacity, and the biggest plant which is also on the block is also on the running at a very high capacity. So don't we have the pricing power to have a decent margin, decent ROC with our customers? or the competition intensity is too tough and more players are coming in, wherein we are not able to take the price hike and pricing power?
Let me explain you about the pricing power in the glass industry. Number one, glass is one of the packaging material. They have the alternate packaging material also, for example, cans, for example, PET, for example, Tetra Pak and others also. So beyond a point, if the things are being stretched on the pricing part, then probably there is a chance that glass can transfer back to the PET or any other packaging material. That is one part. Second is majority of our packaging material, glass packaging material, goes to the liquor industry. And liquor industry is a regulated industry where the pricing power is not at all there, and the government decides the pricing power of that. So there is a big constraint here with the customers that whenever there is an increase in the cost or in the price, they are not able to pass on to the customers, to their consumers, I mean to say. Okay, that is another thing. Third is there are a lot of dormant capacities which are available all across India. Dormant capacities which are not viable. Beyond a point, if the things are being stretched, immediately those dormant capacities will become active. And once they become active, then they will be permanently active or semi-permanently active. They cannot die down just like that. So then there will be a lot of lull in the whole market. So all those factors are to be considered when the pricing is being considered or decided or being passed on to the customers.
And sir, how much the investment we require again for making the glass furnaces after every 10 years or before than that? And how much can the ROC improve to, and how much can be the growth rate also in the sector depending upon and how the opportunity size, sir?
So basically on the glass side, we can reach an ROC. But there are other we have plastic business and security caps and closure business also, which are like the business which is a PET business, plastic business. There again the ROCs are low, but on the glass side we can definitely get 18% plus ROCs going forward. And with the investment into high-end furnaces, which will sell a premium product, we further feel that it should move from 18 to 20 over next 3-4 years.
In the opportunity size for us, sir? So how much in India and exports? Any positive thing happening to India export story or China plus one story?
Yes, there are a lot of opportunities which are there. But problem is every opportunity, whatever is coming out, are being countered by so many global factors. For example, the growth opportunity or the export opportunity against China has come up, but the freight rates have gone skyrocket, and they are diluting this opportunity. Then comes the other thing. For example, the opportunities in Europe are very limited because Europe being a compact country where the local transportation is much lower than the ocean transportation. So there the opportunities are diluted there. So we have already assessed our people, our export department is continuously assessing about that opportunities. Yes, there are opportunities which exist in America, and that already people are doing it. We are already doing in my address. In fact, I told that we have started exporting in a reasonable manner to the Canada and America and some other countries. So these opportunities are already there. In India, the local transportation is also very high, and that is also which is restricting the thing. The Ministry of Transportation is working out how to make ease of doing business and to make other costs comparatively as compared to China. So once these factors they start coming in our favor, so the export opportunities will grow up more and more. And we are in the center of the land. We are not port-based company. So local transportation also plays a very big role, which comes out to be almost 5,000 rupees a ton. And today it comes out to be almost 16 to 17% of the price. That's the reason.
Okay, sir. Thank you.
Thank you very much.
Thank you. The next question is from the line of Nikhil Gada from Abacus EMC. Please go ahead.
Hi, Nikhil.
So what would be the capex and how much capacity expansion would happen because of this debottlenecking?
So on the debottlenecking side, the total plant capex is about 100 crores, and there is a rebuild cost also, which is about 60-65 crores, which we will spend, in terms of both rebuilding and making the furnace on a new basis, and doing a 100 tons expansion on this, with which now the overall capacity on the container glass right now is 1600 tons per day, will go to 1700 tons per day, and another 154 ton high-end furnace will come, so that will make it 1854 tons per day. Once the commercial operation on 154 tons also starts, which we are expecting in another 3-4 months.
Understood, sir. And for this, debottlenecking, how many days will have to keep the plant shut?
Almost 90 days.
And when are we planning to do this?
Maybe early next year, financial year.
Next financial year, early. Okay, understood.
Yeah.
Understood. Okay. And sir, the peak capacity that we can achieve is 100% over here?
It can be 103%.
103%. Okay, understood. So my second question is on the gross margin front. Now that we are looking at like-to-like comparison, last year 1Q, I think if my numbers are not wrong, we did some close to around 80% gross margins, and this year it is around 68%. So this 12% drop, if you can help explain, what has really increased the soda ash prices, or the sand prices, if you can help us why the impact has been so large?
So basically, all the input prices, material have undergone a change in Italy. And percentages here go for a misnomer.
Okay.
The fuel price, which used to be about 15%, is now running at around 25-26%. And similarly, soda ash prices, which last year was almost, let's say, if the factor was 20 rupees a kilogram, is now not even available at 40 rupees a kilogram. So when you read percentages, it will give to a misnomer. So we run our operations based on overall EBITDA, EBITDA per ton.
Right.
The focus is on that. So it's not that when the raw material prices double, the absolute margins will double. So all these ratios will show the abnormalities of the numerator and denominator.
Understood. But in case of when we look at 4Q numbers as well, sorry to just get into the percentage terms again, but we are still seeing some amount of decline. And when we had taken the price hikes, I assumed that it would have taken care of some of this RM inflation. So just coming from that perspective.
So majority of the price hikes have happened in the quarter one of this financial year, not the last. The quarter four, in fact, the prices increases happened, and after that, we started negotiating with our customers, and after a lag of 2-3 months, we started getting upward price increases only by April.
Understood. Okay, sir. So just then, in that context, if you could help me with just a full year perspective, let's say for FY23. Now that the first quarter is done and we have taken some amount of price hikes, is it fair to say that the last year's margins we could better that? I think it was around 18.5% on EBITDA level.
So I think I said we should be around that level.
Okay.
But again, percentages are again a misnomer because, as I told when the input price increases, customer doesn't give as a percentage to sales.
Right.
So what that will give you, X rupees per ton of glass made.
And secondly, in such a situation when there is an exponentially increase in cost, and which is simply which is a once in a lifetime type of scenario, there I think we have to protect our margins at the first %. And rather than looking to the percentage, because the denominator of the whole calculation is changed now. And in these circumstances, I think it will be very fair to stabilize the market. Okay, we are able to pass on the costs. That's all.
Understood, sir. Understood. Sir, and just a couple of questions more. So firstly, since we are starting the specialty glass plant in 2Q or end of 2Q, we have yet not booked any revenues per se, right, in the specialty business?
Yes.
Yes, we have not booked any revenue for that.
Understood. And sir, just then on the export strategy specifically, you mentioned about it, but is this largely going to be for our, core glass containers portfolio, or we are mainly looking at it from the specialty glass plant?
No. We are looking from a sustainable portfolio because we have already put our footprints all around the world. We were not exporting for the sake of exporting in any country at any price. We are just picking up the markets which are suitable and where it makes sense for us on a long-term basis. That's the reason you might have seen that our export percentage is not very large purposely. One is there is a local demand and we have to cater our local demand at the first instant, and export is only the balanced quantity, but looking to the opportunities which are available. So we are looking on and catering to these markets which are on sustainable basis. Regarding 154, yes, the opportunities are much more in 154 as a percentage of the total business, and probably I think once the things get stabilized, much more is about to come.
Understood. So this specific call out, in this quarter regarding the export strategy, I mean, because our capacities are already, we are largely at peak utilization. So just wanted to understand from that perspective, something has changed in the exports market, the reason we are, sort of exploring it now, and is it going to be better than what we make in domestic in terms of margins? Just on that perspective.
These are very spot things which are there. Say, for example, like today because of the Ukraine war, there are some capacities which have gone off. Because of the Nord Stream stopping of the gas, there are some plants which have been stopped there. So there are some opportunities which are coming as a spot opportunities and some opportunities which are coming on a long-term opportunities. So catering spot opportunities with the spot prices, which are you can say where you can exploit the situation, and there are long-term opportunities which you have to make it on a stabilized basis. So both the strategies are very different, and both the targets are very different. So we are doing in the best interest of the company and working out with all business strategies which can maximize our revenues and profitability.
Understood. And sir, lastly, just two questions, bookkeeping, if I can ask, sir, please.
Yeah, please go ahead.
Yeah. So then on this capex, cost of debottlenecking 150-160 crores. Sorry. So is this going to be largely debt funded, or there's some internal accruals will be used for this?
So as a matter of discipline, what we do is generally if the capex is there, we take a long-term loan of around 70-75% of the total expense. So this helps us maintain a good financial discipline that any long-term investment which is to be done has to be funded by long-term. So at any particular time, but most of our loans, we have a prepayment clause. And like with the slump sale, we just prepaid the debt without incurring any prepayment penalty. So this gives us a good discipline. Any surplus which is generated is parked in working capital, which is there, so which goes as unutilized working capital.
Understood. And the second on the tax expense, so now we'll completely shift to the new regime, right? So now we'll see 25% tax rates.
Yeah, 22 plus 1, such as.
That would be all from my side, sir. Thank you for answering all my questions. Thank you.
Thank you.
Thank you. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, sir. Am I audible?
Yes, please.
Yeah. Congratulations on a good set of numbers, sir. So I just wanted to ask, with the new capacity coming in, how much additional revenue will that be able to generate in this year? Like, what are we planning in terms of capacity utilization in this year and next year? How will it scale up?
154.
154 plus 100.
Plus 100, okay. Regarding the capacity utilization for the new expansion, debottlenecking, that will be close to 100 tons per day. 100 tons per day. That can generate the top line of close to 90 crores over the year. And regarding 154 ton furnace, so we hope so that we will have close to around 250 to 260 crores on an annualized basis.
So that's for this year or peak utilization, sir?
Means I'm saying annualized basis. So the day we start going for a commercial production and commercial sale. So talking from that perspective.
Okay, thank you. And sir, so next year due for the debottlenecking, we'll keep the operations shut for 90 days. So how much will that impact the revenue next year?
So 90 days if the operation is shut down. So practically that furnace is around 325 ton. So 325 ton furnace and 100 ton of the capacity will be added up. So practically it will be scaling off the both the things together.
So generally what happens is during this rebuilding time, although there is some loss of turnover, but majority, we have inventory in our stock, so we plan our inventory. And we dilute our inventories also during this interim period, so that the customer serviceability is kept on.
Okay, sir. Thank you. Thank you so much, sir. That answers most of my questions. All the best, sir. Thank you.
Thank you. A reminder to all participants, you can enter 1 star and 1 to ask a question. The next question is from the line of Pushkar Jain from Sequent Investment. Please go ahead.
Hi, sir. Congratulations on good set of numbers. My question is, what is you partly answered it, but what is the asset turn for the new capacity that we are having, the 260 crores top line that will generate? How much we would have invested for the capacity?
It's almost 1 times, 154 ton furnace with an investment of about 260 crores should lead to 1 times the profit, 1 times the turnover.
Okay, so it's more in line with our existing asset turn.
Yes, but the absolute EBITDA per ton is higher here.
Okay. Thank you so much.
Thank you. The next question is from the line of Zaki Nasir, an individual investor. Please go ahead.
Congrats on a phenomenal top line growth, at least for this quarter. Sir, I have a couple of questions. Would this kind of top line be sustainable for the year in addition to whatever, I think 6 months of operation for the new furnace? That is my question number 1, sir. And what, in terms of gas pricing, how would you say that? Do you think this quarter would be a peak fuel cost?
Okay. First is the top line, whether it is sustainable or not, or if I put it mathematically, you mean to say this top line can be multiplied by 4 on annualized basis or not, right? Okay.
Yes.
So as on today or as on this quarter, we are moving as per our budgeted numbers, and the budgeted numbers suggest us that we will be able to sustain this top line throughout the year. So there is no issue at all. Okay, there is a seasonality effect, but that will be taken care in the subsequent other quarters. So rest assured, I think if everything goes normal, so we will be able to sustain these numbers.
Fantastic. Congrats, sir.
Number 2 is what I have not understood properly.
Number 2 is gas pricing, sir. Our fuel prices are 126 crores in the quarter, and we have a furnace there which can be shifted from natural gas to maybe some other fuels as the management has said. So, do you think this 126 crores would be would go down from here, or how do you feel this will pan out, sir, the fuel cost?
Sir, the question is interesting, but I think it is beyond my capacity to answer this, because, the forecasting of the fuel is beyond anybody's imagination. So many multiple
So at least
are there.
At least can I just rephrase the question in terms of how is our gas price, what we consume, linked with the international gas prices, sir? Or whatever the government of India announces on 1st April, 1st October?
Sir, unfortunately, all the companies which are dealing in a gas or fuel, they are government-run companies. They do not arrive with any logic, at least which is known to us. They announce the prices. They don't arrive at the prices, they announce the prices. And you can very well imagine, after the announcement, we have no other choice except to work out our internal efficiencies, internal productivity, which we are doing it continuously. I hope so. I think it is anybody's guess which is beyond corporate forecasting. I hope everything should remain same. That is our wishful thinking. But if somebody says forecasting, it is beyond anybody's capacity to do it.
That's okay, sir. Sir, we are supposed to receive the rents from Somani Home. I think this is to the tune of 29 crores. How will this be accounted on a quarterly basis or the end of the year, sir?
So it is not 29 crores. I think it is odd 21, 22 crores. And
sir.
If you see the segmental results, so we are showing the values there.
On a quarterly basis, we are.
The rent is on a quarterly basis.
Fantastic, sir. And sir, see, last time we announced a furnace shutdown was in August, sometimes last year, I guess. But as told by you, although our production was affected, the sales were not affected because, as you just explained, we had inventory build up. So I guess the next furnace shutdown, we will have the same kind of a scenario, hopefully, sir.
Not understood. Can you just explain again the question?
So can you just repeat the question, please? We just lost the voice in between.
Yeah, last time we had a furnace shutdown, although our production was affected, our sale for that quarter was not affected. So the next shutdown which we are going to take, do you hope that the same kind of thing repeats, that our inventory will take care of our sale?
Yes, we hope so, because our budget numbers, they are as per that. Though we were able to reduce our inventory substantially in this quarter, so those numbers may not be exactly same, maybe a little bit here and there.
Okay, so fantastic. And by the end of this year, hopefully that 150 tons plant will be fully operational. Next year, on the current year, what kind of growth do you project, sir, going on 23 to 24, sir?
So basically the growth will come from two factors. One is the product mix improvement, which we are doing. Our focus is to move more into the high end. 154 will yield the turnover, which is there. We already stated the quantum. We'll have additional 100 tons per day once that additional capacity also comes up. So these are the three growth drivers which we can envision, for over next 18 to 24 months, which will help us, grow the business and also, improve the margins.
Fantastic, sir. Thank you. And if I might just ask a last question, sir, I read a kind of an article saying that AGI is one of the three bidders for the Hindustan National Glass plant. Not going into the nitty-gritties, when do you think this process will be completed and the result known for this, sir?
So these are processes under NCLT, and unfortunately we are bound by the confidentiality clauses under the whole process. So it is very difficult for us to comment anything on this. My apologies for this.
No, sir. Thanks a lot, and best of luck for the year, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Keshav from Raksan Investors. Please go ahead.
Hi. Sir, for higher value products, what would be the target markets for us going forward?
For 154 ton?
Yes.
Sir, 154 ton is primarily for cosmetic, perfumery, high-end foods, high-end pharmaceutical, and high-end liquor industry. So the market for these products are available in domestic as well as exports. If we talk about the exports, for example, like perfumery and cosmetic, out of India, the major market is in Europe. If we talk about high-end liquor, the major market is in USA. If we talk pharmaceutical, the major market is still within India. And if we are talking about other things like food and all, the market is spread out all over the world. So all those markets will be tapped as per the requirement. And going forward, it all depends upon what type of avenues and what type of pockets are being open to us.
Sure, sir. So, sir, if we take a 5-year horizon, what would be your aspirational product mix in terms of alcohol versus other industries?
I think so. Since in a glass industry, we have a opportunity to change over from one product to the other very conveniently. So as far as aspiration is concerned, we want a good basket of all the products together. But besides our aspiration, it also depends upon what type of market the things will open up. In India, the market in alcohol beverages, I mean to say more in alcohol, they are very skewed. They are close to around 75% of the market is in the alcohol segment. But the same market in the Western country or in the developed country is slightly less. It is close to around 50% or even less than 50%. We look forward that once the GDP of the country grows and India becomes 5 trillion market, so obviously there are other segments which are going to open up because of these in the purchasing power of the people besides the alcohol. So obviously we'll go by the flow and we will be tapping all those markets which are going to come up. As far as the attractiveness of the market is concerned, it is purely on demand and supply and which can be spotted out on the spot basis only rather than here. But our aspiration is for a healthy growth, the things should be spread out evenly in all the segments.
Sure, sir. Sir, and if we look since 2 to 3 years back, have we seen any demand shifting from HNG to us? Have we gained market share there?
If we see 2-3 years,
Demand shifting from HNG.
Okay. See, Indian glass market, because of the glass typical business, they have to operate at close to their capacities, otherwise it becomes very inefficient operation. And glass market demand and supply is very, very poised. So possibly, and it is a very localized market also where geography plays a very important role. So we have been supplying to our customers which are in our catchment area and things have been according to that. But yes, once HNG is on a different route, so probably yes, there may be some customers which may like to shift the demand here and there, but more or less it is a very well stabilized market which are being served by the regional players. So I don't think so much of the things shifting here and there.
Sure, sir. And lastly, sir, you had mentioned about the EBITDA per ton being higher for the new furnace. So what kind of value add would be achieving from it if you compare it to the earlier furnaces?
So basically, if you see our today average price realization on the container glass is on 33 to 35,000 rupees per ton. So in the container, in this high-end furnaces, our target is that we should get around 60,000 rupees per ton plus. Which right now we are with the trial runs which we are doing, the average is coming in that range around 55 to 60 rupees a kilogram. So the target is that as we build the business over a period of time, this should go beyond 60.
Okay. So, sir, is it a function of the furnace or is it the function of the application areas you are getting into? Is it enabling you to get into better products, higher value products?
It is combined. For example, let me say, in case of a liquor, the liquor is supplied from a normal furnace also. The liquor is supplied from the specialty furnace also. Specialty furnace has their own demand and their own realization and own EBITDA, and a normal furnace has their own. Same thing is in the food, same thing is in the pharmaceutical. So there is a segment, and within the segment, the specialty glass have their own market segment.
Okay, sure, sir. That's all from me, sir. Thank you and all the best.
Thank you. The next question is from the line of Binod Modi from Sharekhan. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, my question pertains to depreciation amount. Can you share how much depreciation we would have booked in this quarter from this our new 154 TPD plant, sir?
From what we need, like 154 TP, the odd 4%. So odd 10 crores, 10 to 12 crores per annum.
Because why I'm asking this question, sir, I remember in previous quarter you had mentioned that your depreciation amount would be lower by 30 to 35 crore annually from from this fiscal. But looking at 29 crore kind of depreciation, it doesn't reflect. That is what I was asking this question.
So you are not comparing. You are comparing continued operation to the continued operation. So
yeah.
There is a depreciation in the discontinued operation. So that needs to be checked separately.
Okay, fine. My second question pertains to margin, sir. Given the fact that you have already taken price hike in previous quarters, and in addition to that, you will have volume flowing from high margin this specialty glass side. So given all these things, if you still maintain that the margin would be by large to the extent of 18 to 18 and a half of last year. So any sense on that, sir? Can there be any sort of surprise can be seen going forward?
We have already discussed this, that margin should remain same in the way.
Okay, fine. And my last question pertains to, sir, given the fact that you are also expanding organically. Let's say if you are looking for inorganic expansion going forward, so what as a company level, what kind of debt EBITDA you are working on, sir, at the best scenario, or that is one my question.
So that depends on what is an opportunity and how much is the incremental benefit out of the same. But our intent is always that the company should be adequately leveraged also. It's not that the company should not be leveraged, because the cost of debt on a pre-tax basis is still less than 7%. So it creates a lot of opportunity for us as well. So ideally the leverage debt to EBITDA should be around three times or less than that.
Yeah. Okay, sir. Got it. Thank you. Thanks a lot.
Thank you. The next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Sir, although you are participating in the bid, but I believe the biggest player in the glass sector is HNG, which is on the block at NCLT. So what were the reasons and what does it tell about the sector, sir?
I couldn't understand your question clearly.
The question, if the leader of a company, the biggest player of the sector, goes into liquidation on NCLT, so just wanted to understand the reason behind it, sir. Basically,
as I told you,
not company specific, sector specific I'm talking about, sir.
Hello?
Hello? Yeah, I'm talking about the sector, sir.
Overall sector is doing good as such, but one company is not doing, we can't talk about that particular company as such.
Consolidation might happen, sir, and a positive impact on the sector post-consolidation, post-NCLT decision, and can it help be positive change? for the sector and our company?
So it's difficult for us to comment on this. Our apologies, because this question has many elements which are bound by the confidentiality, so it's difficult for us to answer. My apologies for the same.
And sir, we are for us the raw material, freight, everything is at the peak currently, and they should correct from here. And what positive impact can it have for us in terms of margins, sir? And in gas, I believe yes, the prices are quite very high, but they should come down from here from peak time, sir.
The increase in the input raw materials like fuel and other thing has been very steep over last 6 months. Our in-house view is that it should get slightly, ironed out now. But again, depends very, on number of macroeconomic global factors. Like fuel price will still be gone by what is happening in Europe. The other raw material again depends on, how the freight cost behaves globally. So the view is that right now the thing should stabilize for some time, and that's a view for the next 6 to 9 months. After which, we have to see and evolve. Nobody can make a guess out of it. It will be a very wild guess whether the commodity prices will get down or move up, and how the whole global economic factors will, emerge from here.
Freight, I believe, has started already coming down, sir.
Yes, it is slightly tapered. Freight cost.
Freight cost is also one of the factors is the fuel prices or the oil prices. If the oil prices are become stable, so freight will automatically get stabilized and neutralized. I hope so.
Okay, sir. Thank you.
Yes, Ravi.
Thank you. As there are no further questions, I would now like to hand the conference back over to the management for closing comments.
I'd like to thank everybody who joined us on the call today. I hope we have been able to answer your queries wherever we can. Some of the questions we couldn't answer because of certain confidentialities. That's one excuse we'll take. Other than then, thank you very much. Thanks.
Thank you. On behalf of AGI Greenpac Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.